Welcome everyone to Volex. Thank you for joining me as always. This has been requested a few times in the last couple of weeks, and I'm glad that I can provide a wee bit of a company video on the Volex PLC here. A potentially growing dividend. They've had an executive team come in and basically uproot the company and put them back on the road to profitability, and acquired quite a few nice companies in the last couple of years. We're going to have a wee look at everything from their price to their dividend, their history. We're going to cover as much as I can for you. Now, we're going to get cracking right into it. And I do want to point out I did this entire video and recorded it completely wrong. It was recording like an application running in the background. So I hopefully should be able to deliver this a lot better than the first time round. Right, so let's get straight on to it. Ticker symbol VLX. They are on the AM market, the AIM, the alternative investment market. So they're not on the FTSE 100 or the 250. Just as we heads up for anyone having a look at it. Currently trading at £2.43. So about can't even do currency conversion right now, even mentally, because I know that the pound to the euro is a little volatile at the moment. But as you can see, in the last 5 years, they were a wee bit down their luck. They were trading around the 64 pence mark, and then the pandemic hit. They went from their high of £1.60 down to 88 pence again. But since then, they've had a bit of a meteoric rise all the way to almost trading at £5 a share. Now, of course, they have come down from that almost 50% in the last year to their resting price of £2.43 at the moment. Payee Ratio is 15 and dividend yield is a modest 1.48%. But I am always as critical and balanced as I am for every company, even ones suggested by subscribers or ones I come across. This one has a few unique features in an industry I didn't even take a second thought of, but that is what most of these companies are. They're in places and industries I'm like, wow, that's fascinating. So let's jump right into it. Their website, Volex. They are a global integrated manufacturing specialists. What do they cover? They mainly cover plugs. Doesn't sound super interesting initially. However, they are very, very... It's a wide range. So they do normal plugs and cords and connectors. Then, of course, they do high-speed copper interconnect and data transfer cables, so for all your data centers. And then they have EV charging solutions, so everything that you have to plug into your new electric car, and then everything else for data centers. So quite the array. A few of these have actually been through their acquisitions as well. We'll have a look into not all their acquisitions. We'll have a wee scan over a few of them and see what types of companies Volex have picked up in the last 5 years. We're going to go to the Volac Story because if there's anything I love to read, I love a wee bit of background to the company. It's very important when you're researching any company to get as much as you can out of it. Of course, their website is a fantastic place to start. You can go through their story, how they work. You can see companies they've picked up. You can see they'll try and market themselves to you in the investor section with presentations and whatnot. But you can look at the markets they're placed in. You can look at their products, then a few other things. Even onto their investor site. But the most important thing is you want to figure out, will this company in the short to mid to long term be worth it? Are you getting in at a decent price now, or you believe it's at a modestly valued price and you're going to hold it for the long run? Of course, with dividend investment stocks, you are primarily looking for ones that are in a market that is going to be growing, is going to be profitable, and this company's either going to lead the way or at least be a real major player in the game to provide you a bit of return through, of course, dividends. Now, all these stories have a beginning, so our origins, the Ward and Goldstone era. It is one of industrial heritage, perseverance, and constant evolution and change. I love whoever wrote that. That was quite a one-liner at the start. The business, focused on the manufacture of electrical products, was established in the Manchester suburb of Gorton. Okay, in 1892. Volex was actually not formally incorporated until 1990. I'm going to paraphrase through it because there is quite a bit. That year, in 1919, they had a trading profit of £23,000 and assets of 87. Very impressive by 100 years ago standards. By then, it had expanded its operations to sites in Manchester, Salford and Lancashire. setting up factories and former mills. For most of the 20th century, the company remained a family firm, especially during the era of Samson, Mr. Sam Goldstone, who comes across as much loved but also something of an autocrat. They were a leading manufacturer and employer in the region. 1922, they had 850 employees and sold a variety of items such as lamps, torches, medical coils, electric kettles, batteries, dynamos, and telephones. You can see through some of the photos here of their products back in the day. And during World War II, they supplied radio communication products for the UK military. There you go, used in RAF aircraft. Fascinating. By 1969, they were selling products in 100 overseas markets. Although production remained UK-based, it had a local representative offices and distributions across the world. Lovely. Okay, so how they changed into Volex. Although it was by now selling its products around the world, the firm remained a UK-centred family-run company for most of the 20th century. Family-run businesses do have a bit of constraint in most cases where expansion isn't as vast or fast because you are confined at the fact that it is family-run. Don't get me wrong, there's some juggernauts that were family-run, but sometimes, we'll see later in the story, executives came in and the company's fortunes fairly changed around after that. Let's see, the Goldstone family actually left in 1984, changing the name to the Volex Group. Okay, let's see. By 1991, they manufactured plugs, sockets, switches, and remained related electrical items. Lovely. Their accessories division, which manufactured all that, was sold to Electrium, a division of Hanson PLC, which in turn was bought by the Siemens Group in 2006. Siemens being another company that I will probably have a look at their shares in the future. Yeah, so there you go. Many of these items remain under the Volex Accessories brand despite no longer being manufactured or sold by the group itself. That's a very fascinating thing. That kind of reminds me of the Rolls-Royce Group. Rolls-Royce, of course, a massive engineering firm that manufactures aircraft engines. They don't own the car brand. The car brand's completely owned by the BMW Group. So, it's amazing you see the cars, but the company that it originated from it doesn't have any part to play in that. Quite fascinating. By 2000, they had their main office in Warrington, but manufacturing was still taking place in the UK. But I think they changed it overseas. Yeah, manufacturing eventually was entirely overseas in the sort of 2000s. The group was hit hard by the telecoms crash, and the next decade saw a period of consolidation and refocus from telecoms to medical and industrial. Okay. Now, from 2015, the current executive management team took over after a few difficult years. So as you can see by the share price, it was quite a few difficult years. And they once again became profitable, expanding and acquisitioning a few businesses, acquiring 10 since 2018. Through their ownerships of GTK, they are now manufacturing again in the UK after a gap of over a decade. Oh, it's good to see a wee bit of manufacturing back on home soil. And once again, acquisitions are a central piece of their growth. Going into 4 new ones: complex industrial technology, consumer electricals, EVs, and medical. And today they are 8,000 colleagues working over 22 countries and 19 sites. Lovely. Okay, so it was a bit extensive, but I wanted to really show you where they began, and it was a not a rickety history. They had a few good times being a family-run business, but there were also some difficult times. Now, where this changes, in my personal opinion, is the industries they're now operating in are massive growth industries. So, let's have a wee look here. You can see there's their leaders, goes through their management team. Locations, I always love to look at maps. You know by this stage, maps and presentations are my favourite. We have a wee site in Bydgoszcz in Poland. We have a sites in China, one in Indonesia, and one in Tijuana in Mexico. So, let's see. We're going to jump over to acquisitions. because it is a central pillar of their growth strategy, especially in the last 5 to 6 years. As I said, they've acquired 10 businesses. GTK is the reason they're now manufacturing back on home soil in the UK. I will click into GTK. I want to see what exactly they do. What do you do? They are manufacturer high quality electronic solutions, standard and custom cable assemblies, connectors and displays. There we go. Nice. Okay, back over. I want to see one of their other companies, Deka. Who are Deka? Acquired in 2021, Deka is a leading power cord and plug manufacturer in the European market. Okay, so obviously their manufacturing left the UK, but they've been going about acquiring companies. I'd imagine at a pretty good price. I'm not going to throw that out there. I don't think they acquisition for cheap. Acquisitions are normally, they talk about attractive characteristics, sustainable company profile, and the potential to deliver value, but they are obviously looking at companies they can pick up for a bargain. And they seem to be doing quite well at it, and it has proven to be a good approach as they've expanded into markets they weren't previously in. There are a few of the other logos here of the other companies they've picked up. As for the markets they're now operating in, we can have a wee look here. Complex industrial technology. Volex offers high-speed data center solutions and products. There you go. In-house overmolding for low and high-pressure applications, mold design and machining needs. We offer highly competitive high-speed data cables. Now, data centers, massive thing going into the future with all the information and analytics and everything. Definitely a growing industry, no doubt. Consumer electricals, as you've seen from Deka, they've obviously been picking up some of their, where they originated from, which is power cords and whatnot. Let's see. We're going to go on to EVs, where you plug it in. They also are delivering mains, AC and high voltage DC charging solutions using our experience in delivering high quality power cords. Medical, again, delivering complex cables and full assemblies to deliver critical power control and data connectivity for medical devices. There we go. So definitely 4 massively growing industries. I don't think any of them are going to really slow down anytime soon, especially EVs. That's definitely just going to keep on going for the foreseeable future. Obviously can't predict everything, but it's quite good. Data center, power cables and cords, electrical vehicle charging solutions, high-speed copper interconnect cable and data transfers, and then IMS, integrated manufacturing services. There we go. Power cords, plugs, connectors, and receptacles. Now, again, when you're looking into a company, try to explore as much as you can. Yeah, it's not a lot of people be like, oh, you need to know everything down to the dot. I mean, whilst that's recommended, it's not 100% necessary. I couldn't tell you absolutely 100% of every company I've invested in. I could just tell you the absolute generalness. As long as you know exactly what they do, at least never invest in a company you don't know what they do or anything about them. That's the buy low, sell high in certain instances is a bad idea. If you see a dividend company on the way down in their share price, you have to ask lots of questions to yourself in order to make good informed decisions, to try and get as much information. Obviously, none of this is financial advice. It's all down to I ask open-ended questions for you to process and maybe you come to your own conclusion. We're going to go over here to careers. We're going to go over to investors and let's see, what did Nat Rothschild say? We will continue to redeploy capital as we generate free cash flow into high impact cash generative acquisitions. Okay. Jumping on over, I've already taken the liberty. If you want to get to this page, it's actually, if you just head in reports and presentations, and you can go to their annual results presentation, where they make nice graphics for someone like me to understand. Yeah, so record performance. Their group revenue's up 38%, 20% organic growth. Profits up, final dividend was increased by 9.1%, and we'll have a look deeper into the dividend later in the video. Electric vehicle revenues has doubled to 104 million. What did I say earlier? There you go. Qualified on the next generation of 400 gigabytes per second data center products. Ooh, that's mad. Recovery in medical, now above pre-COVID levels. Investing for the long term. They have completed 4 acquisitions and the M&A pipeline. Compelling M&A... Oh, right, management acquisition pipeline. Okay. Planned investment to continue. And, a few other... Yeah, this page just shows their overall... where all their sites are based and people. Financial reviews. You can see that. Revenue's up. Profits up. Yeah. Total dividend per share is up. I mean, these are really... They're good charts. And I say that because it's... I mean, they had a few rough years. You know, obviously the management team has done well in pulling them up out of that. And profit increasing year on year consistently is fantastic. The last 5 years it's doing very well. You can see in 2018 their electric vehicles only made up 2%, but by, the 2022, it's now 17%. So good to see that growing as an industry that's definitely powering them in the background. Now to jump on over to one of my favourite websites, Simply Wall Street. Now, there's actually a feature of this that I haven't been using in any other video. This is the first video you're going to experience the check, the risk check. So, we'll have a look through this. Have their profit margins improved over the past year? No, they're a little lower, but there's a reason for that and we'll see it later. Profitability, the company is profitable. Yep. Are revenue and earnings to grow? They are indeed. Are they in a good financial position? Well, their debt is low and they're not considered a risk. Is the dividend sustainable? Dividend is too low to be a concern. Because obviously, if it was sitting up at like 8-9%, you would be a wee bit concerned. Share price has been stable over the past 3 months, but we're going to have a look and see that it's not really stable over the last 12 months. High quality earnings? Yep. Sufficient financial data? Yep. Any concerning events? Nope. Have they been diluted? No. Do they have any meaningful levels of revenue? Yep. Do they have meaningful market capitalization? Yeah, pretty good. And do they have negative shareholder equity? No, they don't. Okay. Now, they use a wee snowflake model to have a look here. The model says that it's undervalued with reasonable growth potential. Future, the score 4 out of 6 and value is 5 out of 6 at the moment. Dividend doesn't score too high, but we'll see why that is the case. Health of the company is pretty good and their past performance is not good because obviously the executive team pulled it out of a rather sticky situation over the last decade at least. And let's go down, have a wee look through it. If you're using this website, I'll have it down in the description for you if there's ever an affiliate link for you where I can get you membership or anything cheap like that. I will obviously also have that down in the description. The first thing you come to on the overall part of this website is the price history and performance. Gives you a few of the major lines that's happened. So earnings update, sequent acquisition, their dividend decrease. I don't know why that's thrown in there because we'll see that's not really quite the case. Then you go to the past 5 years and have a wee look for yourself. If you bought in at 88 pence or even beforehand, you would have been very happy in the overall capital gains by the time the share price was then worth about £5, going up almost 600%. That would have been pretty nice. But again, with all their acquisitions and the way they've a growing cash flow, growing revenues and profits, this could potentially be a little bit of a hidden gem into the future. Now, my problem is they don't have a great track record, but all evidence is pointing towards their dividend is not going to go down anytime soon and is actually going to increase. Valuation. We can go down here. You can see the Payee Ratio. You can go on down. It goes against some competitors, although sometimes this is a lit. For US stocks, this is very, very, good, very accurate. For UK stocks, it's less so. So we can skip on down there, where we see a discounted cash flow model, which gives you that it's 20% undervalued. Of course, do not take that as gospel. It is simply a suggestion that, £3.33, and we've seen that it's almost, it hit almost £5 a little under a year ago. So, it's quite possible. that it could reach that again. But you could take it as maybe it is undervalued. I think it's definitely undervalued. We've seen over the, at least in the last, year, that it could definitely hit far higher than £3.33. But it could also go a lot lower. That is also a potential. Future growth, they've give revenue and profit to increase over the next 3 years, which for a lot of companies in this, the analysts haven't been too kind to them, but they seem to have been very kind here to Volex. The industry's meant to grow 31%, whilst the company is 11%. Again, it's not always super accurate. It is, future, predicting the future. It's a difficult task to do on any occasion. As you can see, they were actually losing money every year until about 2018, where they were made profitable again, and they've been growing ever since. Financial health, they've scored pretty well. Assets to liability, short term's pretty good, and then long term, again, not looking too bad. And their debt to equity ratio, again, not looking too bad at all. Down to dividend is where the company kind of falls off for me. There's just no track record to speak of. As you can see, they didn't really pay a dividend up until about 2019. Well, I lied. They actually paid one way back in 2012 and 2013. But 2019, they started paying the dividend again. It jumped up, and dividend per share actually did decrease. And they have been increasing it again into 2022. Now, the hope is that continues, which it's projected to. But again, that is analyst forecasts, and we are not 100% sure at the moment. Cash payout to shareholders is quite high, 184%. Don't know how super accurate that is. The earning payout to shareholders is pretty low. I must have a look at the cash coverage and the other thing, Trading 212. We'll have a look at it there. Ownership, nearly 25%, belongs to Nathaniel Philip Victor Rothschild. Now, if we actually go down to ownership, he stands out. It's actually very rare that I see one person own 25%, but here it is. Let's see, any of the other usual suspects about? Nope. Don't see BlackRock, and I don't see... BlackRock's down at 1%. Quite low. Volex Group has a company or employee share trust as well. Oh, there we go. Okay, jumping on to Dividend Max, one of my favourite websites for the ticker symbol VLX. Ex-dividend date for anyone brand new is the date that it's counted that you own the share, although you'll need to buy a share the day before the ex-dividend date. So you'd be talking about the 20th of July would have been the day, or the 16th of November. This year you would need to have the share in order to get the dividend payment on the pay date. Declaration date, that's just the date that they announce, ex-dividend date, much they're paying, and the pay date. So we actually don't know all that much until the 10th of November this year, which is about 2 months away. Let's see. If you had 100 shares, you would have got a payment of £2.40 in the last one was paid at the end of August there. Annual dividends, as you can see, 2012, 2013, they were paying. It was growing, and then they stopped. The company wasn't that profitable at that point, regaining profitability sort of 2018, restarting the dividend payments in 2020. Now, it has been growing year on year, so it was 3 pence in 2020 there. In the end, it's grown to 3.3 pence, and this time it is 3.6 pence. So I'm going to wait to November. I'm going to keep them on the watch list until November. If November rolls around and this 1.2 pence goes to 1.3 or 1.4, that's an encouraging sign. And provided that the share price was still down, sort of between £2 or £2.50, it could be a potential pickup. As for me, I have found this company to be really interesting. A very, very interesting company. I like that management has come in and they've acquired some growing industries, companies in growing industries, whilst having the backing of a more older established company such as Volex, which is quite a win for me, I must say. But I know a few of you have Volex sitting in your portfolio, And thanks for giving me the suggestion for everyone else to have a wee look. That's really all I've got on the whole thing. And you can see when it comes into here, they design, manufacture duck heads, power cords, and related products to laptops, PCs, tablets, televisions, printers, games, consoles. There is a very high chance that a lot of the products in your house actually came from Volex at some point. Very interesting to see. So it is a company that you've probably encountered, whether you've known it or not. I like being one of those people. It's like I like owning shares in a company that I know I use. Volex, I probably indirectly use it, so it is what it is. Revenue growing year on year, net income. I do love when it swaps over to the graphs in Trading 212. They are very easy and very handy to understand. As you can see, operating cash flow again has fallen slightly, although it was picked up by financing. Investing is where they're using an awful lot of their cash flow. As you can see, they're paying out 7.2 million in dividends, and investing items in cash flow is about 53 million. So I don't mind when a company uses an awful amount of cash for investing, but they appear to be raising quite a bit of it through retirement of debt. I must look into that to give you more information as to what that actually means, but they ended up with a cash exchange of minus 10 million this year. Positive all the other years, but clearly they're going full steam ahead in acquiring other companies, which I don't mind. I honestly don't mind a company using their cash flow and investing. It's an encouraging thing to see, and it could well pay off. But yeah, that's Volex. Thank you so much for watching. Let me know what you think in the comment section below. I always love chatting ideas about these companies, and I'll see you all in the next episode. Bye bye.